Today we wanted to talk about legal requirement and tax implication for real estate investors.
Right. So ignorance of the tax implications will lead to bad things. Now, the IRS can audit us anytime they want to for 3 years after you filed. This window will extend if they're beyond 6 years if you underreport your gross income by more than 25%. So we don't want to not tell the IRS how much we have made in some sort of income. We're definitely not. Liars get in trouble, so we're never going to be liars. So basically, this is if you claimed you only get $10,000 in rental income, but you're actually getting 15, this is going to get flagged and you're over 50%. The IRS is going to come for you. So we don't want that to happen to you. We want to just talk about all the legal requirements so you are never in these problems.
Exactly. The next thing that we wanted to talk
about is our introduction, right?
Yes.
Let's hit it. Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below.
Now we wanted to talk about depreciation, and the tax shield often is overlooked. No? The concept of the depreciation for real estate investors is right of the cost for the rental properties over the period of 5 years. This is for residential. And if you are doing commercial, this is going to be 39 years. And this is basically helping you to effectively lowering your taxable rental incomes. And what else we can add here?
Basically, you want to make sure that you can deduct money based on the 27.5. Now, let me talk about MACRS, right? MACRS, MACRS, which is accelerating your the deductions. Under the modified accelerated cost recovery system, you can actually take those depreciations over a shorter amount of time than that 27.5 years my husband just told you. So if you're installing a new HVAC, say it's costing $10,000, you could potentially write this off in 5 to 7 years or 5 to 10 years instead of the 27.5 because you've just added improvement to the property.
Exactly. The next thing that we wanted to talk about is capital gain and the tax on profit. As you know, when you're selling a rental property or any property that is rental, the profit is always subject to the capital gain taxes, which varies based on the length of the time that you own the property and also your tax bracket. And for this, do you want to make an example for that?
Okay, so say you sell a real estate property at $350,000, you bought it for $250K, there's a capital gains of $100,000. You could be taxed at 0, 15, 20, depending on your taxable income, how long you've held the property, and things like that. So you want to make sure that you are going to get taxed on the profit. So what are we going to do about it?
Exactly. One of the ways actually that helps you is 1031 exchange, which pretty much is postponing the inevitables, which is the taxes. In 1031 exchange, this allows the investors to defer the capital gain tax by reinvesting from the proceed of their sale of the property that right now they own to a like-kind property. No?
Right, so you're buying a like-minded property, so a similar property.
And then you wanted to make an example?
No, basically you're selling you said it. You sell your rental property, use the proceeds to buy a second house. Instead of paying capital gains, you're deferring the capital gains on that.
Exactly.
Basically what you just said. So passively active loss rule. Not all losses are created equal, right? So the IRS has categories that are passive, which means the losses cannot be offset by non-passive income unless you, of course, a real estate professional where this is your active day job. Basically, and you want to give the example?
Exactly. One of the examples that I wanted to give you, for example, if you lose $5,000 on your rental as a passive income, but at the same time you have a full-time job or W-2 job that you can make $100,000 on a yearly base, you cannot really deduct your rental loss against your job income unless you meet a specific criteria by the IRS for real estate professionals. No?
Right. So basically, a real estate professional, real estate agents will basically, if you're in this business and it's a full-time job, investing is there, then it is non-passive because that's going to lower your tax bracket as well from other sources. So if you spend more than 750 hours on real estate activities in a year, it's your primary business. You can, and it is a full functioning full-time business Of course, you can claim that you are a professional investor, and this will allow you to deduct the $5,000 loss against your income, which also comes from this place of real estate.
Therefore, this is how you can work around it. The next thing that we wanted to talk about is the record keeping.
Yeah.
Record keeping also is a very important way to making the money in the real estate. Accurate record keeping is vital for calculating the depreciation that we said for the residential is 27.5, and tracking the expenses and repairs and maintenance and defending against the audit.
Right. So you don't want to be audited, as we talked about at the beginning, especially when it's 25. It can go 3 years or 6 years, depending on how much you claim. So you want to make sure that you're legally doing everything you're supposed to do. Again, we are not tax accountants. We are not CPAs. We are just real estate agents. So we see this on the back end. We do not see this on the front end. So we do recommend you talk to your legal advisors and not just trust a YouTube video. Even though I love doing these videos and talking about it, I am not your legal advisor. So you need to talk to somebody a little bit more detailed about these things as well to protect yourself more.
And don't forget to call Alan Victoria Real Estate Professionals in North Carolina, specifically Pitt County, North Carolina. We'll love to help you. And this is our number. And also watch the video here, and we'll love to connect with you in next time.
Absolutely.